Yeah.
Mic test. Mic test. I hope you guys can hear me. A little feedback would be appreciated. Otherwise, I'll turn this. Well, actually, I can wait just a second and listen back to my. Okay, it's working. God, that is the worst thing in the world. So anyway, this video is basically going to be about my current footprint setup in Discord today. Let's see. Might as well pump my Discord. Okay, so in my Discord today, I asked folks at some point what you wanted me to do a video on today. Holy cow. So yeah, here it is, right? So I asked everybody, I don't know, what is it, 3 hours ago now? Hey, what do you want me to do a video on today? And it was decided footprint and how to use it a little bit more with some specific setups. So what I'll be doing today, and one reason to join the Discord, right? You get to provide input like that, and then there's lots of cool information regarding trading there. Lots of passionate traders, people discussing markets, and it's growing. And it's one of those things, you get what you put into it, and the more you talk, the more others talk, the more everybody is getting something out of it. But if you join and then you just kind of sit back and don't really discuss things, don't provide much feedback, number one, you'll never get moved into our private channel, which is where we've got a bunch of really turned on, sharp, active, contributor oriented type traders sharing signals, discussing markets, discussing new ideas. Well, there's not really a whole lot new, but you know what? We've got some people in the markets. Son of a gun. We've got people in the markets. I'm sorry, in the Discord that do have some pretty innovative ideas on how to use studies from software that they use to give themselves and other people signals. So we've got like Zip there, who does coding for Sierra Chart, and he's able to often integrate a lot of our ideas and put them into a study. And so we do get a lot of edge from those sorts of things. But again, it requires folks actually contributing, being part of the community, in order to get to those private rooms, because we don't just give out access to that. Again, there's only like 20 people in there right now out of what, 350 people on the Discord. So it's tight knit. And again, if you do join the Discord, read the rules about channel. I outline all of it and what's required if you want to try and get in there. And in the process of you trying to get in there, you're going to get more out of the Discord anyway. So it behooves you, it benefits you to do that anyway. So enough of the plugging the Discord here. All right, cool, loud and clear. Appreciate it, guys. So here we have my latest version of my footprint. So I'm just going to first outline what is on the footprint, what it's measuring, etc. And then I'll go into some of the settings. And then after we get through all of that, and if you guys have questions, etc., if you're on Discord, don't ask me on Discord, ask me on the YouTube chat, because otherwise we're going to get, if you guys start tagging me, you're going to get all these pop-up boxes. It's going to come into the YouTube stream. I don't want to just completely disconnect Discord right now from my desktop. I don't know how to quickly turn off the notifications that pop up here. There's probably a quick setting, but I don't want to digress too much. So anyway, so if you guys have questions about the settings, or you have more questions about the setups that I'm going to go over, just put them in the YouTube I'll come back to them, because there's going to be a delay. Like, it starts out with 8 or 10 seconds, and then it eventually gets up to like 20 or 30 seconds. So I'll kind of glance back there every once in a while. So, okay, so, oh, son of a gun. That's okay. This works. See how you see how on this right side, it was a second ago showing multiple profiles, and it's still showing it, but this is now new data. So anyway, on this right side, I have got, so this column here let's do this. Makes it easier. This column here is my regular trading hours delta. So let me see if I can start over. So this is my regular trading hours volume profile. So this only spans the last regular trading hours session. That's all this is. And then this little bit darker greenish yellowish color, some people like to call it the throw up color. I did change it a little bit to more of a greenish yellowish color, because people were talking about the gold just looking like throw up. It's like a goldenish kind of color. So hopefully this is better, but whatever. It's for visibility. So the area that's brighter is the value area, and the area that's darker is the non-value. So the value area is the 70% area. So you can see there's like just a little bit. So this is value area high, right? So that's what that is. And then here, the deltas are, well, let's go back here. So the deltas are this first column, and then the volume is this second column, okay? And then, so like you can see these are negative numbers here, like -4, and maybe it's hard to see. -486, and then this is volume over here. I don't even know what it is, what it's like. It's kind of even cut off, but might be like 5,000 or 6,000 contracts, something like that. So that's what that is, right? And then it's kind of related, so I'll go back over here. When you're in the regular trading hours session, like here, you see how as I move this column, all of a sudden this pops up. These are the deltas. So blue are positive deltas, or it's basically ask volume, when the ask is hit, right? So it shows aggressive buying. And then obviously this purplish color is bid delta, right? So that's when sellers hit the bid, right? So it shows absorption or aggression from sellers hitting the bid, right? Just depends how you think of it, right? So that's what, and then this second column here, right, on this side, is the extended trading hours, and everything is the same. But except I typically make RTH wider in the settings than I do the extended trading hours, and that's just because I know that RTH holds more value, and I just want to visually have some indication of that. Right? If you make them both the same size, it might trick your brain visually into thinking, because maybe you're not looking at the quantities, it might trick your brain into thinking, hey, this holds, this ETH over here holds just as much value, right, as the RTH, and it doesn't, because it's usually a very small percentage of the total contract number, right? So when you compare it, it's different. Extended trading hours can affect RTH, and it does, but it's only if there's like a whole bunch of volume aggregation, or if it's an extreme high or low, something like that from the extended trading hours. Anyway, I digress. And then my point of control is white here, right? And then so that covers the composite. And then what's kind of new for maybe some folks who aren't in Discord and don't see my charts every day anymore is I've done this candle in the middle of, so first off, This is a bar, okay, right here. And so I've done this candle in here, and this candle is a volume candlestick. So the more volume that this candle has in it, the wider this candle will be. See, so you see like this candlestick here, it's really thin. This candlestick really thin. Well, there's less volume in that. Okay, this candlestick nice and fat. Okay, and then notice what I'm using for my chart aggregation. It's point and figure 1-12. And so it's one rotation of 12 ticks reversing from any given point in the candle, right? So here you have your candle open and your close. It's a doji, but anyway, so it comes up and then it goes let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay. And then a new candle starts right here, right? One tick lower after this prints. So theoretically, this candle might move up and down in a range, not 12 ticks, and it'll just get bigger and bigger and more volume will aggregate here. And this column here on the right, I know we're focused on this one. Here, let's get rid of that. This column here on the right, which is volume, this is all just volume at each tick within this candle. It'll just get fatter and fatter and fatter. And if it doesn't actually have a 12 tick rotation, this will just be one big. So theoretically, this could be the only candle for the day if we don't range outside of 12 ticks, right? Wouldn't that be crazy? But how is that useful? That's useful because it's showing us, first off, movement away from an area, okay? But it's also, if not a lot of contracts are transacting, it's showing us that, this is what the volume profile looks like, and this is how contracts are aggregating around this level. And sometimes during the day, it takes a hell of a long time for contracts to say, prices move down like this and done this. And a large player might say like, well, we need to accumulate, I don't know, 40,000 contracts here or something. All right, that might be too many. I'm just using it as an example. And so if they can accumulate those 40 and then start aggressively buying in like 15 minutes, they'll do that. But if like today, right, there's the market is on a higher time frame, it's balanced. And so it's taking a lot longer for price to oscillate and kind of move through these levels. And then we got contract roll and other things. Okay. But what this kind of point and figure type of candlestick is going to show us is that it's going to show us volume aggregating at a specific level rather than, let's say, a 5-minute chart. And let's switch over the time. Okay, let's make sure we're on this chart. Let's go to 5-minute. Come on, load it up, right? Look at this. Do you really want to, here, let me move this lock fill space over. And hit the lock fill space. Oh, shoot. Noobed. Okay. I'm all right about what, there? And then, all right, there you go. Do you really want to aggregate the volume from all of these 5-minute candles? Like, well, how the hell does this aggregation look like over more time? Okay, you could say, well, let's use a 30-minute. Or you could just use a point and figure, right? So let's go back and go to the bottom here, the selection. It always starts with 10-1. They'll go 1-12. Apply. So I'm covering a little bit of theory on point and figure before I go through all my settings, and hopefully that's okay for you guys. But the 1-12 is kind of a part of how I like to trade with the footprint, especially on slow days. So anyway, that whole 5-minute section were all of these, right? And how much more useful is it to look at, okay, well, here we have low volume, a little bit of a high volume node, and then another one, right, in this candle here, right? And then we have a quick, what looks like a pretty quick rotation in this candle, right? So it comes up, rotates, 12 ticks, and then boom, new candle. And then this one rotates fairly quickly. So what does that tell you? Number one, it tells you that there's a lot of interest to buy and sell multiple levels quickly. So what does that tell you about the market? It gives you information at the very least, but that tells you that there's some interest to buy and sell quickly at multiple levels, right? So, how long did this take, right? 7:55, 8 o'clock. So this happened very quickly, right? You look at the time down here, 7:55, 8 o'clock. That's Pacific Standard Time. And then this one, 8:06. So some quick rotation through this area. And now, 54 minutes later, all this happened, right? Up, down, up, down. I mean, who knows how this built out, but volume built out, right? And on another type of chart, this was a Wyckoff spring. But anyway, and then here we have another hour. Like, okay, so you see, like there's a lot of volume here. You can see it on the right side. Lots of volume, lots of volume. And then we came out here, and it took us a long time to slowly grind out of this area. So value was established, right? So the market was like, consolidation, a lot of maybe disagreement over what was value, and then boom, right? Now establishing value a little higher. Next candle came back. It took a long ass time, 3 hours of sideways, and this is at 5 minutes. But here you just get to see it as hardly any rotation, but now you see the volume aggregation and what kind of profile it is. Is it, right? If you're into market profile, what is this? Right? That was terrible. But what is this? Right? It's a balance profile. It's a neutral. It's a market in balance from this area, from this node here, right at what, 29? So it's balanced, right? And again, this is more end of day volume profile, but we spent a bunch of time on a bunch of contracts here. Okay, so now something that's important about my settings is this volume, right? How long these bars are, and what determines how long this bar is this candle and these bars are compared to the previous visible bars in the screen. And why is that important? That's important because if that setting is not turned on, the comparison is the visible volume bars are just compared to what's going on only in this candlestick, right? And I'll show you guys that setting. Okay. And so this would be the very widest bar. It would go all the way out here. And then this would just taper like that, right? And so what would you have, right? You would have a bar that looks like it has a ton of volume. But is it more the question you have to ask yourself is this more volume than over here? Well, because of that setting, we know there's more volume here than over here because this is wider, right? But if you had that setting turned off, they would all just be wide, right? And then this would have now this is where it really matters, is in this bar, because these are the widest points here, it's brighter, right? Because this bar would look like this, super wide, like that. But this is a low volume. This is a consolidation. Low volume, the market's figuring it out bar, right? So this shouldn't hold as much weight. But watch, I turn that setting off. So now here we are going into the settings. So I'll eventually start and just show you guys all the settings. But for now, I'm just talking about the importance of that setting and a little bit of how to determine the weighting, I guess you might say, of the volume by looking at it visually. Okay, so let's go into the studies. We're looking at the setting for this volume bar. Okay, so I use two number bar studies here. So this one would be the footprint volume text, is what I kind of call it. I rename everything according to how it makes sense to me. And then there's a study or a setting down here. Let's see. Volume profile bars length relative to all visible bars. Yep, that's what it is. I don't think there's more. Yeah, that's it. Okay. So let's change this to no, and let's see what happens. All right, what you're looking at is this yellow, right? Look at that. That's how most people have their footprint set. A light bulb should be going off in your head. Oh my gosh. Right? Because, yeah, you can look visibly at the numbers that are in here. They're kind of hard to see here. Right? But is this even close to this? It looks like it visibly, but is it? No, it's not. It's 1,045 contracts. This is 5,400 contracts right here. It's hard to see. Maybe I need to make these a little darker. I don't know. We'll see. It's okay for me now. So anyway, when we turn that back on, so that is like, it's just a stupidly important setting that most number bar people don't use. Okay, or footprint. Okay, so let's hit apply. So, see, you see how that changed? So relative to everything that's visible. So what that does, what you should be asking yourself is like, okay, is my footprint chart wide enough to include everything visibly? That's important, right? So if we scroll back over left here to the open, it's going to adjust what the length of these volume bars. Okay, so is that important? Yeah, that's important. Time for me to go buy a 49-inch widescreen so that I can see more of my footprint and look at rotations and stuff. So the next thing, right, that's important about how I have my footprint configured is, this center bar overlay that I use, right? I mean, it's giving you a lot of the same information that the volume bars are giving you, which is there's not a lot of volume here because this is not a fat bar. All right, so it's just another visible indicator that this is a low volume compared to everything else. This is a really low volume bar. This is another low volume bar. What do we know about how price moves? Impulse, consolidation, low volume, higher volume, fake out. Oh, big buying, consolidation, right? A less fat bar, big buying, right? Because the market moves in impulses, doesn't it? Impulse, high volume, consolidation, fake out a little bit higher, so trap some traders. Big buying, consolidation, big buying. Again, impulse, right? So pretty important settings here on that. So these little diamonds in the middle are what I call bid and ask ice, and it's controversial because in Sierra chart we don't have the raw data from the CME that shows that the order IDs for any Iceberg orders are confirmed Iceberg, right? So Sierra chart doesn't allow us for now, or it doesn't allow coders to see that data for now. Maybe they'll decide on doing it, but for now they haven't, right? This is what Bookmap has an advantage over Sierra chart on, which is that they can look at verified icebergs, right? There's unverified icebergs and there's verified. So there's synthetic icebergs and then there's native. The icebergs I'm talking about being verified, which have the same unique order ID on the CME, are called native icebergs. Right, and that's what you can see with Bookmap. The synthetic is where uh, each subsequent revealed iceberg of like a parent order has a different unique order ID number, and yet it's still an iceberg order. And the CME allows that by large institutions uh, using a server outside of the CME's servers or very close uh, to host, and then so they have a different order ID. And those you can't. Those are extraordinarily difficult without some sort of algorithm. Um, I think it's just near impossible to tell whether those are an iceberg, right? But at the end of the day, what we care about is that volume transact and that there's some absorptive buyers or sellers, right? And a whole lot of volume is transacting at a level. So sometimes you get a really big delta imbalance at a level, right? And so really all I do is I'm looking for massive delta imbalances to kind of let me know that there's some absorptive buyers or sellers, right? As you can see here, there's this comes out as an iceberg. Is it a real iceberg? I mean, who the fuck knows if it was an iceberg? Maybe this was a humongous bid order, right? Unless you were watching the DOM in real time, you don't know. So this setting just looks this diamond is only printed when there is an imbalance of 600 or greater on either side, right? So that's all that is, right? It's not going to give you a guaranteed way of saying, well, I'm going to buy with these institutions who are maybe scaling in here, and short term I'm going to win every time. That's just not how it works. Okay, so again, it's just more information. Okay, so that's what these little diamonds are. Again, this is all kind of self-explanatory. Session delta, nothing new. You guys have all seen it. And then this, let's see, these bars on the left are again, the more imbalanced they are, the brighter the bar, the longer the bar. So this is just measuring net deltas at each tick. So all I have is net deltas and total volume, and that tends to give me everything. Tapering, it gives me the ability to look at absorption versus initiative. Right, you can see here, even on the volume, absorptive right into massive buying. So if you had like a diagonal delta where it's like, bid by ask volume, bid by ask. Oh, this probably should be a capital as well. Right. This would tell you that, right, this is absorptive, this is buying. So, in the diagonal type, there would be a big diagonal difference here, right? Just think about it a little bit, right? It's the same thing. Absorptive, boom, right into aggressive buying. And what did we do? Straight up. Again, absorptive, right into aggressive buying. Absorptive, right into aggressive buying. So you see how that works? Right? Tells you the same thing by this type of setup is doing, but with a lot less. All right? This is summing the volume. This is summing the deltas. Ask volume minus bid volume at tick. Right? So you get to see aggression just looking at it this way. It's just different than what some people are used to, but different doesn't mean it's less efficient or bad. This is more efficient because this is giving you all the sums, and you just have to figure out, how this works in relation to what you're used to. But once you kind of use this, you can get a lot faster than the diagonal stuff. Hey Jack, I learned it from reading the shit out of everything. So I'm just super passionate about markets. So some I learned from all kinds of, I learned tons of stuff. Don't get me wrong. Props where props are due. I learned this from some of it from Axia. I learned some of it from Market Delta videos. I learned some of it from perusing futures.io. I learned some of it from reading definitions on Sierra chart on ask minus bid volume, and then just sitting there and thinking about it, and then creating all my own settings and going like, how the hell does this apply to the market? Asking tons of questions. Like you see the ice here. Look, we have ice in real time right here. 684 of 684. So you see how that little diamond prints, right? So it just keeps filling. What, right here at 130, 35.75. Look at the DOM. Just keeps filling up. Look. Just keeps filling up. That's an iceberg. Every time they keep hitting it, it refills. Right? Or someone could be manually buying, right? But the idea is the same. Someone keeps refilling the bid. Whether they do it manually or through an iceberg or through an HFT, doesn't matter. So anyway, let's see. Back to the setup. And then down here, this overlay here is cumulative delta. Okay? And then it just kind of runs in down here. I'm probably just going to, I don't know, probably get rid of this. Because the problem is I could use a left side cumulative or left side scale and use the cumulative delta. But my real estate on this chart is so precious that I don't want to cut off anything. And I don't find that it's that useful. This cumulative delta on this chart is that useful. Okay, so anyway, so it's just overlaying bar delta percent of volume, and that's all this is. It's the bar delta. The bar is delta. So the bar is delta in and of itself, which is right here, negative 2385. So it's this number's percent of the next column, volume. Right? So it just kind of tells you that this was more of a selling bar. And look, price what moved up in the bar. So that's divergence. Is that useful? Right? Where you had more negative delta and price moved up? Yes, it is useful. Right? It's on a PNF. So again, it's rotational based on this little area. You can see that a lot better, that divergence on this PNF on a slow day. Does that make sense to you guys? Right? Why the point and figure? It gives me hope. Jack Burns says, it gives me hope. Yeah, man, just study your ass off. That's really what it comes down to. Yeah, I mean, end of the day, that's, I don't know. I mean, some people really do a lot better hearing things and talking to people than reading. So there's all different, and some people do better by just actually doing fidgeting. And one guy says, Timmy Trades, he says, likes to reverse engineer things. Hey, I remember from last year him telling me that. So, you know, that works for him. For me, I like reading, I like doing, I don't like reverse engineering things. I like to look at something that someone else has done and try to build it myself. That's what I like doing. Okay, so for me, that's a lot more challenging. So like for example, Ticino Trader, he builds chart books and he does a fantastic job at it. And people have told me, hey, do you want X chart book? And I'm like, no, I want to do it myself, or I'll subscribe to his service. That's how I roll, because I want to learn myself, right? I don't want somebody handing me something and then saying like, oh, here you go, and then I haven't put the work in to understand it. So that's why I do these videos. I don't share chart books with really anybody. I did last year a little bit, but for the most part, I don't share any chart books. Why? Because I want you guys to learn how to build them. And I'm hoping that these tutorials are helpful to that aim. Okay, so I digress. The difference between doing it live and then doing it on my own, where I could just stay totally focused. Yeah, it does, Jack. It totally does. For all the reasons I mentioned. I don't know if you've been tuning in since the beginning. But I kind of go into why it gives you edge. Okay, so, and then also I have value area high, low, and POCs. And we call that dev POC, or developing POCs, developing value area highs, lows. And that's what these lines represent, where value area high and lows developed. Okay, so the value area low, I have pink. The value area high, I have blue. You can see that they're labeled here, but it's labeled for the current session. So you can kind of see how that looks, right? And I think that's pretty useful because a lot of these end up getting tested in subsequent bars, especially if you go back to a time based bar, right? The dev POC, or I'm not sorry, the dev developing value area low, like for example here, it might be painting here, 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 and on a 5-minute bar it just keeps bouncing off of it, right? So on a point and figure, it's going to look a little different. So anyway, now let's get into the settings, right? Okay, so I guess we can start with the volume profiles on the right. I don't know. I feel like so many people know how to do this. If you guys want to give me feedback right now on what you would like me to focus on as far as settings, because that shit takes so much time. Especially if I'm going to talk about it, I can just show you on the screen and not talk about it, and then you can pause the video later. So if you guys don't want me to go over the volume profile, then I won't. Those settings. So, one, I will save the video. Anyway, I'm just waiting. I'm just waiting for you guys' feedback. The candlesticks, yeah, but what about the volume profile? Not a lot of feedback. Okay, since this video is going to be on... Yeah, volume profile is kind of easier, right? So let's just look at it real fast. I won't talk about it too much. So RTH, volume profile. So I do 2 volume profiles. Okay, so one for RTH, one for ETH, or extended trading hours. So then I just name them. Okay, settings. So I do 1 tick per volume bar for ES. For NQ, I would do 4 ticks per volume bar. Okay, well, all right. Well, someone's saying you don't need to do it. So I know, right? I already have another video that covers all this stuff. So anyway, I'm just going to go real quick. You guys want to follow? Because, this might be their first video of mine, and they're like, I wish it was here. I don't want to have to go look at the other video. All right. So show chart values on profile with labels. That's for this. Volume, delta, and range. That's all that it is. Hey, the market's closed. Happy Friday. Hope you guys have a good weekend. Okay, so let's see. Okay, we got that. So that's for RTH. Okay. See how I put the time in here? Use different start time. Okay. ETH is exactly the same as RTH, except in the setting width, you see how this is 5? Right, depending on how stretched your screen is, so this is 5% of the total window width. So, if this thing is really, really wide, goes all the way out to here, you might want to change that to something else. I think 5 might be the minimum or something. So anyway, this is 5. This is, I think, 8 or 10 based on this width. So you have to adjust that. So that's maybe one of the only things that's really different about that. So, okay, now let's go into the footprint, which is what people want to see. So, first of all, you need to go into chart, graphic settings for chart, and what you need to do is, instead of using your global graphic settings, you want to use these settings, okay, for this chart. Why do you want to do that? Because what you're going to do is you're going to do an overlay for this candle. And again, this chart looks at this whole area as the designation for the candle, right? So this is the whole designation for where candles go, right? So you need to, if you did a center candle like an overlay bar, and it was like this, the settings here were set to 100%, it would be this wide, and it would cover your whole footprint, okay? So what you need to do is not use global, because your global is going to be for, you know, oh, sorry, candles and everything else. You don't want to make changes to all of that. You want it to only be localized to this chart. So you want to go into graphics settings chart, unclick this. Okay, so now look at other. Your candlestick width has to be a percentage of the total area that equals this black area that we're going to create with the footprint. For me, it happens to be 26% based on how wide I have this time scale adjusted, right? So if I move this around, this bar is going to overlap, right? So it has to be something, you know, once you create this, it's static. You shouldn't be stretching this around, otherwise it's going to distort everything. So the candlestick width, 26%. And that's what we're using, candlestick. So you don't really care. You do care about price volume bars with percent, because we're using price volume bars. Now, if you wanted to just use not price volume bars, then these bars are always this wide, even if you have more or less volume, right? Then candlestick width is what you actually change. Okay, so, and then of course, go in and change your candlestick up, fill, down, fill, outlines, right? All of this stuff in here to do the colors that you want, right? And it's going to be localized to this chart. So that's the first thing you want to address, right? And then the second thing you want to do is probably, if we're looking at the footprint, right, you want to do, I can't remember why I did two separate. I don't know. I fiddle with this so much, and sometimes late at night, I don't always remember why I do what I do. So I did two separate number bars. So I did the number bar with the footprint volume text. Okay, so let's go to the settings. So you see what I'm doing to get it over here on the right? 1, 2, 3 columns. And this has column 1, 2, and 3. I just make these first two columns black, because my chart's black. So if your chart's gray, then make it the same color as the background of your chart. Okay, so no text, based on volume percentage. It doesn't really matter because it's all black anyway, right? What you put in here. But you just want to have it be black, because you want it to have something, so it's taking up the columns 1, 2, 3. And that, so that this third column where you actually have volume is in this third slot for this whole designation for where candles go in the number bar studies, right? So that's all you're doing. Just a little trick. Okay, so this, it's the number bars texts are total volume, right? So it's a volume, and then the background type is a volume profile, not an outline or anything like that. I don't know, we can make it an outline, can't we? See that? Maybe you like that. I don't know. I don't like it. Right? I like volume profile. Okay. It's all about the visuals for me. Quickly seeing where volume is aggregating in a candle, right? And then the background coloring method is based on volume percentage. Okay, so volume percentage of that candle gets you brighter for higher, and darker for less. Text coloring method, none. I don't want to spend too much time on this video because I want to tell you guys how to use the footprint with other things. Okay, so again, you're not even using all this stuff. Open and close marker style, you're not even using it. So don't worry about that. Here's your column 3%. So 25, 50, 75. That gets you the shading. You can mess with that. Again, there is that. See, this shit takes a long time. Use separate colors for, let's see, volume profile bar's length relative to all visible. Make sure that's set to yes. We covered that earlier. Spacing adjustment value is at 3. Okay, so that gets you the widest possible profile. If you did this to like 10, it would squish it. Watch. See that? So 3 is great. But maybe you want something a little bit different. You just play with it. So that's what you're looking at for that, right? So if this is adjusted up, it's going to squish everything, including these other two, left. Remember, we're using a different number bar study for this over here, right? So all of these numbers right now are all balanced to allow me a center bar candle overlay that doesn't get covered. So that's the fine tuning of it there. You could make this the maximum, say 23 or 24, and then you can squish these all over left, and you'll have more space between this number bar and this one. So you'll have a little space over here, right? See that? You'll have a little space. That's what'll happen, right? But then you got to go in and you got to adjust this one as well to get it looking symmetrical and looking nice. Okay. So did we do all that? Let's see. Just want to make sure. Did I cover everything? Yeah, pretty much. Now we'll go to the next number bar studies. So you would be adding another number bar study, and then so this one, because you want it to be approximately the same width as this one, you got to do the same. Let's see, column 2, none transparent. And then what did I do on this one? Yeah, spacing adjustment. So on this one, what I did, it's a little different. I'm only using one column. Just one column. These are all, you see how the background coloring method is none transparent, no text. Again, no text, none transparent. So it's not actually using these other two, right? So if you did use the other two, you'd probably have issues with things bleeding and one number bar being on top of the other number bar. So that's why I did it like that. So again, this one is ask volume bid volume difference. For the background type, it's right aligned ask bid difference profile. Okay, right aligned ask bid difference profile. For the background coloring method, this is a funky one. Ask based on ask vol bid vol difference percentage of max dominant side. So a lot of people struggle to find this. And then the text coloring method is based on dominant ask vol bid vol to volume at price percentage. Sorry, reading through the chat. Joe Santos. Okay, cool. That's cool. I don't know what that was actually referring to, but I think what I'm doing is I show the settings here, and you guys were like wanting me to show them, and then you can pause the video later or whatever. So that's what you do, and then the range is like this is less volume and then greater volume. So range 0 is less volume, range 3 is or greater delta. Sorry, I was saying volume, I meant delta, right? Again, we don't use the background on this. Okay, so going down, you guys won't explain everything. You can copy what you want to copy. You'll do a lot more work if you copy everything exactly, but whatever. I want to spend less time on this video. So no open and close marker style. Again, nothing. For column 1, max compare thresholds, which is what we're using column 1. this determines the text 25, 50, 95. It also determines, let's see. So you see how this text is yellow? Let's see. Where did I? So use separate colors. Oh, it's actually here. So use separate colors for text coloring method, which is here. When the delta is 95% or greater of the total volume, it'll color it yellow. Why is that useful? Right? It quickly tells you when there's like almost 100% absorption. So you see this 36 ask volume of 36 total volume, 100% absorption, right? So this one, not quite 95%, so it's not yellow. This one, I think it might be yellow. I don't know. But that can be useful in real time to help you spot absorption as it's happening in real time. So let's say the market was moving down at a tick, and then all of a sudden, like, you have your numbers here, and they're yellow. These numbers here in this box are yellow in real time, and they're just yellow, yellow, yellow. I mean, that's just another quick indication of this is 100% absorption. Or what tends to happen is, let's say the market is in consolidation mode. So it's more useful to explain this now, guys. And then all of a sudden we get to this point, and then we break out. What ends up happening is you hit some sell stops here or something, and then this whole area here is yellow. Why? Because it's like the market just moves quickly through this whole area, and so it turns all yellow because it's like there's these market orders that are ripping through the book, and it's just hitting 100% of the delta. It doesn't retrace at all. It doesn't have any time. It's just an explosive move. So what ends up typically happening in this kind of move is we go right back up and retest a lot of the yellow, right? Or maybe the market, let's see, a different scenario. So the market does this, and it comes down, and then it consolidates, and then boom, there's the yellow, right, on the footprint. And then the market comes down and goes again. And then at some point, the market makes a reversal, and everyone's like, well, shit, I don't want to buy here, right? I don't want to buy here. It's already rallied so much, right? And then it slowly kind of grinds and grinds. And you're like uncertain. Do I buy pullbacks? What do I do? And then it comes back up. And remember, this is all areas that people who are short, they all have stops because of this. Because they've been in profit instantly for a long ass period of time. So they were in profit, in profit, in profit. Price never even challenged that area. What do you think is going to happen when we get, these are all yellow, right? And it's on high volume because the market just rips through it with velocity and explosion and power, and everybody's like, oh my gosh, I'm bearish, and it never even retests it short term. As it gets close to that, what do you think is going to happen? The market's going to go find those stops, and it's going to fill that area back in. It's going to test it for value. So is that useful to see those yellow? Right? Absolutely. Excuse me. Absolutely it is. Okay, so that's why this setting is the way it is. So use separate colors for text coloring method. Yes. Now look at the spacing adjustment value. Because you're using only one column, right, for this delta column. Oops. For this delta column, you're using one. It wants to use and put this delta column the full width, right? So what you got to do is you got to do the spacing adjustment value and shrink it all the way over. So 49 is the magic number for me to get it right up against the maximum width candle. So we're getting closer to the candle. We're getting closer to it. All right, so I have some other cool stuff in here with the tick and the NYSE NASDAQ. When you get like a NYSE NASDAQ American exchange uh, tick value of negative 3,100, the whole bar lights up as a buy signal, potential buy signal. That's covered in another video. I ain't going into that this video. It's way too much time for this. Okay, but again, there's another video for that, and I walk you through all of it. You can find it. It was like probably 2 or 3 videos ago that I did it. I don't know. It's a video that is the main focus. It's like the I don't know, the focus video on the YouTube page. So easy to find. Easy to find. I'm sure somebody could help you. Join the Discord. Someone will help you find it. Let's see. So to make this candle, so now that we've built this out, right? We have built this out, right? Yeah, we have. Okay. What we need to do is do a center bar overlay study. Okay. So I think that's what it is. It called center bar overlay? No, it's not. What is it called? What is it called? Bar. Sorry, guys. Maybe somebody knows what it is. Overlay. Overlay bar. Hey, there you go. So add. This is why I do this. This is why I go find them in here, because I call them something else all the time. Right? So it's overlay. Okay. Put in the center bar overlay. Yeah, there you go. That's it. So overlay bar study. We'll remove that. We'll go to the settings for it. So it's based on the main price graph. And then I call it this. And then you overlay from same chart as study. Yes. All right, and when you make this yes, it's going to change this chart number to overlay as the same charts. This is chart number 10. See that up here? It's just going to change it to 10. Keep the multiplier at 1. Chart region 1, right? So that's overlaying this bar. Again, if you didn't go back and change the chart, global, or graphics settings for the chart and make this chart its own settings, it would try to maximize it at 100% and it would cover everything. Everyone's like, oh, that's how you do it. So graph draw type, candlestick price, volume bars. Right? You don't have to do, you can just do candlestick bars. Watch. So now they're all fat. But is that really that useful? It really is. Was the amount of volume here the same as here? No. Or here, I'm sorry. Yeah, you can see it because of this right side, but shoot, make it consistent. Sierra chart gives you the ability to look at volume in different ways. So here, yeah, the volume down here is a lot brighter. So I know that this was a big volume bar. But now we're seeing it in 1, 2, and then with the price volume bars, a third way to view the same stinking thing. So why not? Why not use it, right? Why not give your brain another hook, another way to visibly look at the market and how it structures itself based on essentially little miniature volume profiles with deltas, right? Deltas are just showing us who's aggressive where, right? If you had to ask me what's more important, volume or delta, I'd just say fucking volume every time. Because the shapes matter, right? That's why TPO is so powerful. Volume profile is so powerful. But I like being able to look at each bar like this. Because, as a short-term trader, shoot, I want to know that there was not a lot of interest to sell this area, right? And that there's a lot more interest back in this area, right? And that this is consolidating and that there's buyers in this area, right? I want to know that and couple that with the trend line and some other cool shit that I'm going to show you. All of a sudden you get a really powerful tool to kind of look at, hey, the market is structured like this, trend lines are looking like this, TPO looks like this, candlestick structure looks like this, and then you get some confluence. Oh, the footprint looks like this below this area. There's a trend line here. We broke the trend line. Where is there interest to buy and sell? Well, certainly not underneath the trend line. Hey, now all of a sudden we get a cue as to maybe the market wants to go up. All right. So anyway, back to the center bar overlay. I don't know if I finished it. So candlestick, we want candlestick price volume bars. Boom. Immediately loads better. Okay. And so, color this according to how you want it. Yeah, that's it. Use chart graphs, graphic settings for subgraph. So this will use the chart graphic settings that you set up here in chart graphic settings. So that's where you set that. Let's see. Did I miss anything? All this is covered in another video, and it takes a long, long time to go over all of this. So maybe I'm not going to cover it in this video because I did want to go over setups a little bit. I think we're good. Did you guys get the ice? No, we didn't do the ice. You guys probably want to see that. It's on Discord. I have it in Discord in the Sierra chart channel. I put all these settings up there. So if you're like, well, I don't want to watch the YouTube video, go join the Discord, and it's Discord. It's free. Everyone has access to that channel. It's not the private area of the Discord. And go check it out. Here it is, bid ice. Okay, so the study is volume at price threshold alert version 2. So you do one for bid ice, you do one for ask ice, right? Zip may have a study that does both, right? So if you're running into performance issues, use Zip's studies because you will save yourself a lot of headache with performance if that's an issue for you. Because, in my case, I do everything out of box with Sierra chart, and I add a multitude of studies rather than having just one well-written study by a Sierra chart wizard programmer like Zip, who writes them very efficiently. And then, you're not having all these multiple studies in here that are causing performance issues. So, check out Zip's forum. Again, we got links in our Discord to all of that. Yeah, he's an amazing coder. So that's one way of saving yourself performance issues. Okay, so add 2 of them. You're doing it here this manual way. And then you're basing it on the main price graph. I changed the name to bid ice. So the comparison method is ask volume, bid volume difference. See how easy this is? Volume threshold for bid ice, it's negative 600. And then we're not doing extension lines. I don't even think the percentage threshold matters, right? It's just ask volume, bid volume difference. And then over here, you're setting these triggers because you could have multiple ice per candle. So that this is the multiple ice here, up to 40, maybe 60, I think Sierra chart allows, something like that. Anyway, you probably won't ever have that many ice in a single candle. I don't think I've ever used them all and then it ran out. So you change 1 to the draw style to diamond and then adjust the size. 3 is what works good for me since I use like a number 7 or number 8 font. I can't even remember. Whatever. So do that for your bid ice. Change it to the color you want, right? And then, yeah, I think by default goes right in the middle of the candle. Let's see. Yeah. So anyway, do that for the bid ice. Then go over here to the ask ice. I'm running out of steam, guys. It's a long week. Volume threshold 600. So not negative 600, so 600. So that defines it as ask volume because it's a positive number. right? You could have an alert on, by the way. If you want to have an alert on, that's fine. Whatever. You can do an alert condition even. Anyway. I digress. So maybe that's important to you, maybe not. Anyway, just cancel this. So that's how you set it up for the ice. And let's see. Look in here at any questions in the chat. No, I think we're good. Okay, so you guys are like, well, how the hell do I use this? Okay, so let's go here to this chart. The way I like to use my footprint, this is older. All right, so look, we have a trend line. We have essentially this structure, right, where the market tries to break down. We have essentially a trend here, right? Now the market doesn't go down and even hit the third trend line. Okay, so this is just one example of how to use it, right? The market is fucking complex. We all know this, and there's 100,000 different setups and variables in the market, right? So I don't want to oversimplify this, right? But I want to give you guys some examples so that you have an idea of how you can use this, all right? So the idea of this is here we are in this trend, right? And we're oscillating. So we make a low here. We come in, and what happens in this area, right? Do you remember what the footprint looked like? My kid's squealing. That's this area here. What does it look like? We break down. What's the volume relative to this area? Not a lot of interest. This is tapering. 2,000, 1,900, 1,200, 1,300, 600, and 15 volume. Okay? So using this, you can see this is absorptive, this is initiative. This is absorptive, this is initiative. This is absorptive, this is all initiative. Okay? Absorptive. Now the market grinds, right? Absorptive again, but pretty balanced. Initiative. Absorptive. Lots of initiative. What? All this volume is what? Going to act like resistance, right? Buyers and sellers in this whole area. So you would expect the market to digest this area. But how are you using your footprint? You're using it to show you taper here. And then as price moves back in with, oops, it's still in pen mode. Here, so this area, let's see if I can even describe it better. All right, here we have the trend. Price makes this move. Right? Now this is a swing low. Well, what does price do? Immediately flushes back into what? This is all resistance short term. Again, this is a Renko chart, not time-based. It's 4-tick based, so each bar prints after 4 ticks. Okay, so or 1 point. Okay, so if you don't get a lot of movement, not a lot of bars will print, right? So because of that, you get very high volume bars with very little movement. That just tells you a lot of values accepted here. Okay, so when the market comes back in to what? This was an area in your footprint that held volume, right? We can go back and we'll see that again. Oh, son of a gun, this stupid pen. Got to get better at this. Okay. This, it held a ton of volume here, right? That's a lot of volume. So when we flushed and came back into it, right, they distributed some of this here and got out of likely this position. But the fact that we didn't just come up here and then turn around and flushed back down already gives you a clue, because you can look at this structure. Push right up in here, break the trend line, push back down. What? This prior structure of volume, we know it's volume based on our footprint. This prior structure acted like support, right? So, if you had bought this whole area and bought and bought and bought, you could totally de-risk here and be in profit and then just buy pullbacks and then keep buying higher, right? And that's what large players do, is they'll de-risk some, then they'll just keep buying. Especially if, like, you look at here, let's look at the 15-minute chart. This thick white line is DevPOC, or developing POC. So price moves down, it hangs out here. So this is POC at the time, right? So developing POC right here, lower left. Once we push it and come back up, you see these candles, the way they're structured, no wicks. Look at that. They just open and keep going up. Look at the 5-minute. Look. Opens, just keeps going up. No, not even any retracement. So what does that tell you about the market? It tells you that it's not moving up and backfilling. Okay, so going back to our footprint, again, we're using point and figure, so the structure looks different. But now let's look. Let's look at this market. So this footprint is telling us a bigger picture about where volume is accumulated and then where it's distributed or reaccumulated for another push. Again, this is a low volume day. I mean, this closes what? T+1. Yeah, not even 30,000 contracts. I mean, there's all this roll going on between contracts, right? So, oops. This tells you lack of interest, accumulative, consolidation, value. You can visibly see it. A lot of volume here. This is the trap. Not very much volume. Aggressive buying, especially in this area. Look at that, right? Because that correlates to, when you look on a different type of chart, that correlates to the breakout. Different kind of volume and coming right up into what? VWAP. So aggressive buying. Shorts are totally freaked out at this point. Trend lines of breaking, right? All this was what? Consolidation. We faked out, came right up back in through it, and kept going. So that they're now all trapped. What? Look at this volume. This is a lot of volume. So when you see a lot of volume on a footprint and we move right past it, yes. If you are bearish the market and you don't have this kind of setup looming, right? Where you have this trend line. So this is a potential rule of 3. 1, 2, 3, right? But we don't even get to the third trend line. Well, if you've studied my work, you know that there's a setup with the rule of 3 that if we have space between the first, second, and third trend line here, like that, and we don't even violate it and then go reverse, it typically shows that buyers are aggressive in the market, right? So you guys are asking, how do I use the footprint? It's man, it's just another tool in my trading. I don't use the footprint mainly in my trading. I mean, I always have it up on a chart because it's, I mean, okay, we're in a market that is very balanced. This is not an easy market to trade, right? This is a market where we don't have a lot of initiative and strong impulses and volume. It's summertime volume. Volumes are shit. This is a different kind of market to use footprint than a market that's volatile, right? And we're not in that kind of market. And so that kind of market's going to have a totally different footprint distribution. ICE will be used differently in that type of market. You'll find ICE halfway between a 50-point impulse. That's massive. In a lot of cases, that's just a short de-risking, and then they'll keep pummeling the market, right? Looking for better prices. Because, in volatility, big players still play, but they move at a much higher, they move at a much further distance. Sort of, I guess like the candles will travel a lot further than what everybody thinks because it's just volatility, right? So your mean reversions are bigger, like your outliers, everything's just bigger, and so your footprint changes during that. But again, and that's why I say like there's 100,000 different scenarios and how to use footprint. You're like, well, fuck, I want it to be simple. It's not. And if anyone's telling you that it is simple, they're lying to you. It's not simple because the market behavior changes all the time. Okay, so enough of that. I digress a little bit. Okay, so going back to this, we had this price action. We violate all this volume. We distribute, and then you see this accumulation, and you see what? A neutral profile. So the market is balanced above what? All of this consolidation. It's neutral. We don't have a market that is, all right, so this drawing I'm going to do is going to represent this area, right? But I'm going to draw it over here, okay? We don't have a market with bars here and a bar here that looks like this, right? And then another bar here that looks like, here we do like that, right? Liquidating shorts. No, this is a neutral kind of footprint. This is a huge buying impulse above here. And like what I say here, it's probably, this is distribution here. But notice how it's over a wide area like that. It's not like this where it comes up and then boom like that, and maybe a little tail on tiny volume, right? Because this would trap a whole shitload of buyers, right? But this is not. This is neutral, taper, and then boom, what do we get near the close? Explosion, right? And then look at where developing POC is. Here, then it goes to here. So what? If you're short today, you're trapped. You're trapped as long as it's above POC, right? And if you go look on, well, here, if you go look on a TPO chart, I made this footprint chart bigger just for this demonstration or whatever. So if you go look at a footprint chart and you look today, so this right here is today's, I'm sorry, did I say footprint? TPO chart. Need to eat. So this is, let's see, right here at the bottom is the volume profile. I just use delta profile, and then this TPO chart shades the blocks according to volume. So I don't really need a volume profile. So I use this as a delta, and I use this as like the TPO is showing you volume by how bright the blocks are. Okay, so that's cool. So right here at the bottom, we see something. The POC is 4236. That was at the end of the day. At the end of the day, the DevPOC or developing POC migrated at the close because of high volume. But this number here in the middle of the day, which was, it was useful to know when price was here, because of the volume right here, there was a much greater amount of volume in this area, and yet the POC or the DevPOC was where? Go back. Oops. The DevPOC was where? Here. 4227. So as long as we're above here And if you looked at that TPO chart to show you how much volume was above or below this area, and then here, you would find that the volume was higher in this area than it was for all of this. Okay? So, and you can use other tools to do, oh, son of a gun. Hard to do this when my charts are all over the place. And I don't want to mess up too many. You can use other tools to show you that. Okay, I'll show you here. Okay, so draw VBP. I think it's TC1. Let's see. Okay, so we'll draw this. All right. So I'm drawing a volume profile onto the chart. Here, no, I did the wrong thing here. Erase VBP. Draw VBP. Okay. We'll draw it from here to here. All right. Volume 240,000. All right. We'll draw it from here. Oh, I can't see the. All right. Let's see. Sorry. We're gonna find it. We're gonna zoom in right here. Volume 150,000. You see that? So that's a tool. That's a very cool tool. These might be overlapped by one candle, but whatever. All right. So is that a tool? That's a cool tool to help you determine that volume above what 4227, it's about here, was much less than the volume accumulated below. So if as long as we're above, who's in trouble? Probably the shorts if we start to move up. And what did you see around this area? You saw some very aggressive buying. You see these positive deltas? Just aggressive. They just started buying and then whoosh, it went on its own. Just because of traders out of position. You can see that in the volume profile. Look. Right? Lots of volume here. This whole volume area, most of it occurred either at the open, but a lot of it occurred at the close right here. Right? So they just distributed it out of all of this that was below DevPoc, which is what? It was here at when this became an impulse bar. Right? So what does the footprint show you? Footprint shows you aggressive buying, and you know aggressive buying out of what? Out of this area here is going to lead to, because of the volume transacted here, is going to probably lead to shorts getting squeezed. Right? So it's the structure of the market as well as the footprint that helps us to get an idea for a better trade. And of course, you can incorporate, which I do all the time, the TPO to look at, okay, how are we behaving around prior days value? So this, remember, bright white is higher volume. So what? Right here. So as soon as we break this area, look at this. This is here. I know I'm getting into other things other than footprint, but that's what's necessary because you're using footprint as just part of your tool bag. It's not your whole tool bag. I want to be honest with you guys. So you see the way that this profile from the overnight looks here, right here. See that? And then there's just a ledge. So what do you think is going to happen? Because you have a fair amount of volume in this area. What do you think is going to happen when we break this area? Okay, so this profile, it's all buying. It's all buying. And then, last night, a lot of traders got blown up by just the way the market moved. Okay, so what do you think is going to happen when this gets violated? If you're already long, you're going to buy more. And if you're short, you're going to cover. Right? So it's structure as well. So going back to what happened, look what happened. Right? This whole area, as soon as we hit it, if you guys saw this in real time, it happened very fast. Right? So again, these structures on a footprint bar or a footprint using PNF on a slow day, right? So there's all these caveats. It's a slow day, so I'm using PNF. Then you're like, well, do you use PNF when it's volatile? You could. If you want to see rotations and it's showing you something like volume's really heavy and the market keeps rotating, I don't know, every 5 to 7 points, it's high volatility. Maybe you want to use a PNF 1-16, right? And that 1 dash, or maybe even 1-20, so 5-point rotations, or 1-24, 6-point rotations, right? That's what that would be. Because maybe the market's so volatile, right, that you want to, it's going like, right, let's just say it's high volatility, the market's going, and it's going 6 points, and then it's going like this, and then it's like tightening up. But if you're looking at a candle, you have no idea that the volume is right here, and maybe it's right here, right? Maybe the volume's here, right? In the middle. Do you want to know that? Like, yes, if you have a volume profile on and it's the first time we hit that level today, maybe we know that. But what if it's the second or the third time, right? And so you have a volume profile that's not really quickly telling you that, hey, volume's transacting in these candles here. So would you want to maybe use a 1-24 in that environment to kind of show you where the volume is on these footprints like that or something? Yeah, and it might print. It might print every it might print a candle every 3 minutes rather than every 5, right? And that's useful to know. But you have to play with that depending on how volatile the market is for that day, right? But you have to be aware of the concepts to know that's what you need to do. So that's what I'm helping you to be a little bit more aware of with all of this. So hopefully that's not too much gobbledygook for you guys. Yeah, use a bunch of different things. Like look at your weekly volume profile, right? So this is an hourly chart, 60-minute, and then this volume profiles for this week, right? So what does it look like? Right? It's this kind of shape, right? That can help you. So maybe if you're you're trading today and this is the value area low and we bounce just above it. You see that? Weekly VAL, weekly value area low. Was there interest on the footprint to sell weekly value area low? That's the question. Look at our footprint. Right there. Was there interest? Hell no, there was no interest. Right? So I'm using footprint to determine, hey, this bottom can happen a number of different ways. Okay? It can happen with huge ice here and a little tail and then ripping back to the upside. But I'm more concerned about, hey, if this structure rips back to the upside and there's no interest, or there's heavy interest, absorptive interest into, maybe on the DOM there's panic here, right? Maybe monitor your fellow newbie trading buddies and they're like, oh, we're bearish, it's going to go to 4,200 because, you know, fucktard Furu on Twitter said so, okay? And so you're like, well, it's going to blast down. And everybody's bearish. But then you hit an iceberg, and then it tapers, and then it shoots back up. Well, if this iceberg is like 3,000 lots or something on a higher volume day, that's going to be significant in this structure based on what? What we've already covered. Random chart up here is what I call it. Based on this structure. So it might look different on different days. And you have to put in the saddle time. You have to put in the time looking at price action on your DOM What does capitulation look like? What does a lack of interest look like? And couple that with your footprint and go like the actual volume that's transacting here compared to others. Oh man, like there's no interest to sell here. If you're just looking at this chart, are you going to know? Are you going to know that, there's very little volume right here in these candles? Not really, because of the way Renko prints. But high volume often are important, right? High volume in this bar. So what that means is that price spent a bunch of time between 4 ticks. And so because it spent a bunch of time there, you can see this bar. Look down here at the bottom of the screen, right here. See how it's a high volume bar? 1102, and then the next bar 1130. So this bar right here took almost 30 minutes to get into a new bar, right? So see how Renko's different? It doesn't really care about time. It cares about the ticks of movement. So because it's only 4 tick, it's only 1 point, you get to see kind of like the trend, the movement, but then, you use the footprint to look at the internals of the bar, right? How are they shaping up, right? So if you know anything about market profile and different shapes, apply that to the footprint as well, right? So anyway, I think I'm done. I hope you guys have a really good weekend. Yeah, Charles, context. Totally. Context is king. It's repeated often by traders, but sometimes folks they just don't realize how important that is. And then you sometimes hear traders that can't explain what the context is. They're trying to sell you shit, right? And so they just throw out the word, oh, context. Context is what matters around this area. And they don't explain why. What is the context? I'm trying to explain to you guys what the context is. So that's why I'm giving you very specific situations and what it should look like in those situations. But can I cover 1,000 different setups? Hell no. Hell no. The market and that's why experience in this game, if you're learning in a directed, super focused way with some structure, it matters. And honestly, I hate to plug my Discord again, but that is why it is so valuable to be in a room or to be in rooms with experienced traders who know different setups and have seen different situations or contexts in the market, right? They've learned they may not always know why, right? So if you find somebody who can tell you the why, befriend that motherfucker. I'm just going to tell you right now. Whoever that is, if someone can give you the why of context, make yourself available and interesting to that person. I'm not saying it's me. There might be another guy out there that it fits your trading style. Pfft, I don't care. I'm not selling anything here. Right? The reason I have my Discord is because more eyes on the market, it's much better than just my own. I've already seen that. But do I want to babysit everybody all day in Discord? Hell no. I'm about making money in the market, right? So the ethos, the whole spirit of my Discord is you give and you get back, right? And we actively spend enough time every day talking about with our moderators and each of us kind of looking at folks who contribute to know, hey, yeah, this person doesn't belong in the private group. In that private group, it's just goodwill. People just helping, sharing charts. There's some are better traders than others. Doesn't matter. It's, we're essentially trying to help each other, right? So, you don't have to be the best trader in the world, but you have to be turned on. You have to be passionate. You have to be willing to be wrong. I'm wrong every fucking day at points in there. I'll post charts saying I think this, the market does the fucking opposite, right? So what does that do for my learning, right? When I put an idea out there and it's wrong, I'm a lot faster to start asking myself, well, all right, I said the market was may likely do this and it didn't do that. So what does it force me to do? It forces me to question how I got to that point, and because I did it publicly, I'm examining my thought process so that I don't look like a fool too often, right? Because nobody wants to be wrong all the time, right? So that forces me to try and elevate my game. Whereas if I'm by myself, right, I'm fortunate in that I'm pretty uh, introspective and like self-analytical, but I don't do it as well by myself. I do it a lot better when I have other people, um, examining what I'm saying and saying like, oh well, that wasn't good, right? Or asking me, why did you come up with this, right? So when I'm by myself, my self bias takes over, and I'm like, our brains are kind of evolved to sort of uh, make excuses for poor performance, right? But when other people are objectively telling you, well, your performance stinks, or why did you why did you say the market was going to do this? Well, give a rationale. So that's part of my rules in Discord. When you guys are in there, if you're going to share a chart, rationalize it. If you're going to tell me the market's going to do X, Y, and Z, give me rationale. Why? Right? Maybe your chart after your opinion is enough for everybody to get the context because you've marked it up. That's cool too, right? But it's not a place where everybody just says like, "Oh, I'm the fucking greatest trader on earth. Look at me. Here, I'm going to post my trades." No. We have an area in there that's journaling your trades. And the rules are, give us your stop loss, give us your entry, give us your take profit, and tell us why you entered the trade. Give us your rationalization for as much as you can for your stop loss as well. If it's market structure, fine. If it's risk, fine. But state it, right? So, anywho, have a great weekend, guys. Enough of the rant. Study hard. The next thing I'm going to do is do my equity review, but I don't have time to talk it through. I want to get it done in 20 or 30 minutes and spend time with my family. So anyway, have a good weekend, guys, and hope you guys found value in this. I would appreciate any feedback, constructive, of course, that you if you want to give it. All right. I'm not great at this whole YouTube thing. Everything I do here is kind of off the cuff. I don't really prepare. I don't edit videos. None of that. This is just so things don't always, if I could be more aware of things that I'm messing up with, then I'll probably do a better job. Again, I don't rewatch my videos back or anything like that, so that's why a lot of this stuff I struggle to recall because it's like a one-time. It's like I'm having a conversation with you guys, and that's it. So anyway, please like, subscribe, do all that shit. I'd appreciate it. I can't monetize anything on YouTube because all my videos start with songs that force the monetization to the artist. So subscribing and liking just helps other people find this content, and then maybe we can build a really kick-ass trading community. That's the goal, so that we can all make more money, and evolve with the markets. Become smarter, better traders. That's my passion. I like giving back. I like discussing and talking about markets with other people. And anybody in Discord that or on Twitter that has talked to me knows that about me. This is not a money making endeavor for me. I'm passionate about markets and want to improve myself by improving others who then give back to me. And man, I will be sincerely giving to those who give to me. So that's the idea. Kind of utopian, but I don't know. I think this is the great experiment, right? If it fails, fine. But I don't know. I have a belief that we can siphon off enough good, turned on, smart traders to make an awesome community. And it is I'll tell you what, our contributors group is awesome. There might only be 20 people in there. There is only 20 people out of, I don't know, 350 plus on Discord, whatever it is now. Um, but those completely interested in the market, um, and they they give me enough information throughout the day that helps me to where I can't even act on every single bit of information that I get. Right? It's just I'm trading too many things, and that is what I want. At the end of the day, I want all of us sharing information that we can either decide to act on or not. But is that information that I otherwise wouldn't have had? And I'm nodding my head. Yeah, that's what I'm getting from it. So anyway, have a good